Here, Scott, with some of the top performing stocks on Friday, see how they're holding up, see how you want to play them. We have to start with Apple. Where's that next big resistance? Because it seems like everyone still loves to go to Apple.
Well, last week we talked about only trade the stocks that show relative strength and that get a little bouncy when the market wants to bounce. And Apple was my leading indicator all week long. Apple only came into the 50-day moving average. So if you look here, you'll see this is the 50-day moving average when the market broke its 200 and went even lower. So it still shows me relative strength. So if you bought in this area, that's good. Congrats. But right now I'm seeing some major resistance around this 380 to 383. So if you bought in the hole, make sure you sell some. If you bought in the hole, maybe sell some in the money calls, because as a trader, I know some guys are going to try and short this area, including me, just for a quick trade. But if we hold up and go sideways and continue to base, perhaps with a little bit longer time frame underneath our belt, this does make new highs, but I don't think it's going to happen so quick.
Is it the same strategy then for Baidu of about 1.5% on Friday and sort of bounce too far too fast kind of thing?
Well, but Baidu also, streakier, much streakier than Apple. It was a great vehicle to play the bounce, but it's also coming up into resistance. It's opening up by $2 today. I know I'm also going to be looking as an active trader to short it perhaps in front of 150 to 155. So if you look here on Baidu, you'll see, look at the size of this move. You know, V bottom, V from here all the way back into old resistance. So usually in this kind of scenario, you don't get Vs, you get Ws. So you come up, you come back down, and then maybe you go up again. So right into this 155, I would not be chasing Baidu from the long side. I'm going to look to probably fade it with a relative weakness type of divergence.
And then let's go to Colgate, because I know that you and Jill talked about some option plays on that last week. You rarely talk about this because it's sort of a high dividend yielder, about 2.7%, but not necessarily a sexy stock. So let's look at that chart to see if there's a play.
Yeah, with Colgate, Jill's just like, listen, we have to start changing the complexion. We have to go to stocks that have, no debt, that have a dividend, because right now you can't get any of that
Dividend
in the bank.
higher than the 10-year yield,
Yes.
which isn't that hard.
Exactly. So, we went over this stock. The stock did give you, we talked about a two-tier approach, one around here for the held, and then I think we even drew this line just in case it got a little, crazy out there, which it did, and it responded well. So that means when the market wants to be strong, this stock is in the game. It does have some resistance right around this 86, so the easy trade or the easy snapback happened. If it could hold above this recent downtrend, above around 83.80 and go sideways, I think it can continue some momentum to the upside.
And same thing with Deere here, up at 2% on Friday. We're still seeing this. If it consolidates for a while, there could be more room, but it is coming up against resistance.
Yes, these stocks need to show commitment to the move. They had their snapback last week. Now the question is, can it go sideways and then continue? Deere actually acted a little bit better than Caterpillar. So if you look at Deere, Deere is trying to snap back, but I think it's going to be met with a wall of resistance right around this 77 area. So from like 65 to 75, that to me just looks like a short-term trade.
So if all of these stocks sort of get hit with that resistance level, does that mean they're going to drag the markets lower, or does it just mean that it could just need time to consolidate?
It means that there's going to be a pause. And during that pause is when you figure things out. Is there a commitment to the move? Can they follow the right retracement rules, meaning they don't pull back more than they just rallied and maybe hold the top third? They hold the top third and they show momentum, then you could stay there for momentum. But if all of a sudden it gives back, a third of the move or over half, it invalidates the bounce, and then you have to just look back to the recent lows, and that means the trade could be over or that W comes into play.
All right, great advice. So those are the ones to look at.